The markets are starting the week off hot, but things may not be as wonderful as they appear. We're going to talk about earnings season, the crypto fake out, potential market manipulation, and much more today on Money Never Sleeps. Welcome back, everybody. Excited to be here with you today. As we get going, hit that like button down below, subscribe to our channel. Nothing or Kevin I say is financial advice, so please do your own research before making any buys or sells. Kev, we had a little fake out this morning. Some misinformation was spread around the internet about a ETF being approved. That turned out to not be the case. In fact, good old Gare Bear Gensler came out and said, you know what? We're not going to prove this because there's too much concern about market manipulation. And goddamn, that son of a bitch was proven right first thing in the morning. What a way to start the week. How are you feeling today?
Dude, I was so happy to see what a morning to wake up to. I woke up to $30,000 Bitcoin, which again, I'm not long a Bitcoin, so it didn't matter to me. But 2 seconds later, I saw that it was below 28K. I saw everyone that was cheering within 2 minutes being like, show's over, guys. We got fooled. There's so many influencers that absolutely got trapped out in this and FOMOed in. Dude, they fucked everyone in this move. And I couldn't, doesn't say more about where we are in this market than what happened this morning.
Man, what a way to start the day. Want to say GM to Randy and Chris. I hope no one watching this bought Bitcoin at 30K this morning and FOMO'd in, because that wouldn't have been the best thing. That 20-minute bull market we were in sure was something. October not living up to its name quite yet. We have, they're trying to claw back. Crypto is trying to claw back. We still have a green month for Bitcoin, not so much for ETH. Solana is in the green now, but we'll get to that a little bit later. We have not too much on the economic reporting side this week, but we do have earnings, and we hear from 13 different members of the Fed this week. So should be a lot of interesting discussions to parse through. So do a quick rundown of what's on deck this week. We heard from Fed President Harker earlier. Tomorrow we get retail sales, hear from 3 more members of the Fed. Wednesday, we get Beige Book, another 3 members of the Fed. Thursday, jobless claims, home sales, economic indicators. Jerome Powell is speaking. 4 other members of the Fed are speaking. And then Friday, we get one final Fed president. Loretta Mester will be talking as well. So that's really it on the macro side of things. If we look at earnings, tomorrow is B of A. We had Schwab this morning. Kev, you'll get into that in a bit. Wednesday, we get Tesla and Netflix. That should be a pretty big one. And then Friday, we get American Express. I'm going to be interested with that to kind of see what delinquency rates are looking like, how consumer spending is going, how Amex views that, what their take is, any future guidance they have there. So, Kev, do you want to get into the Schwab earnings and kind of parse through, the headlines look good, but as you dove into the numbers, it was not quite as rosy of a picture.
Yeah, absolutely. So obviously people were buying Schwab because they beat expectations, right? But we've been saying for the longest times, expectations, when they're set so low, it's easy to beat them every single time. And that's the thing that, the news likes to report. It's always the headlines, especially if they want to make you to think that this market's in a better position than it is. And from the data that we see from this report, it pretty much shows that it's not. So there's a lot of stuff in this that's really not a great thing, but I just want to pull up right here. You can see active brokerage accounts, right? So we got 2% in Q3 for 2023, but there is one where we saw. Let me see if I just lost it. Oh my goodness, here it is. We see that we have lost. Oh man, see, that's the thing I hate about these things.
God.
They make them so small that I lose it, and I got glasses, guys. But here, there's a lot of stuff that we can go to. So we'll just start at the beginning. We can see that interest revenue obviously is in millions. This is 4.
Kevin, we're going to have to zoom in because no one else can see what you're seeing right now.
Maybe that's the problem. How the hell do I zoom in with this? Oh, here it is. Dude,
there we go.
Yeah, now it's too big. All right, that's probably good, right?
Yeah, that's good enough.
All right. Oh, I've got to zoom in on these fucking pages. But it's bad. Look at this. This is Q. So this is cash and cash equivalents, or interest and earning assets. We could see that this quarter of 2023, we are putting in, 34,391 in millions. If we see that in last year of 2022 in Q3, we can see that it was 53,127 million. So that's a huge drop, right? And you can also see that the yield rates have increased significantly. We went from 2.16% to 5.22%. So that's not a great sign, because that just shows you that, cash is leaving the system. We're also seeing bank deposits drop significantly. Oh, look, as soon as I make it big, I can see everything once again. But here it is, bank deposits in Q3, right? We're at 290,853. That's in millions. So that's roughly $290 billion or so. We can see that year prior in this quarter, we were at 420 billion. So that is a huge difference from where we were a year ago, right? And we can also see that, in the first 9 months of 2022, we were at roughly 440 billion. And then this year, in the first 9 months, we're at 315 billion. But now with Q3, we're at 290 billion. So we have lost a lot of money out of Schwab. It is absolutely bleeding. And we do know that Schwab was one of those banks that had borrowed a lot of Federal Home Loan Banks, those loans, and those have to be paid back whether you borrow them in 1 years or 1 to 3 year advances, right? So obviously you can get a lot more in 1 year, but then you have to pay it back within that 1 year time frame. And with Schwab's bank, that was, I believe, 130.48% of their equity was Federal Home Loan Banks. So that's not a good sign. That it shows that they have a liquidity issue somewhere. I keep going into it. Again, bank deposits dropping is not a great thing. We see non-interest bearing funding sources, that's down from last year's quarter three. We can also see that it's down from the 9 months preceding it in 2022, and then 2023 right here is pretty much, if you look across the board, everything is a lot lower than where it was last year in Q3. So that's absolutely terrible. Let me pull this back a little bit more. I want to find the one where it talked about brokerage accounts, because it said that brokerage accounts were down 10%, which pretty much means that there's a lot less people that are trading. They haven't added any new accounts. They've actually lost accounts, if that's the case. And that means that a lot of people aren't, putting their money in the market. So that means that there's money out of the markets, even in retail hands, that is leaving the system. So we can see, where is it? Somewhere around here. That's why I hate these things. They're so small. Net brokerage accounts in thousands, 287 as opposed to October 2022, 2023. No, it's not it. Here it is. I'm so stupid. It's backwards now. Yeah, here it is. 10% has been lost in new brokerage accounts in thousands. So we went from August of 2023, we're at 311. In September, we went to 280. So 280,000 accounts down from 311,000. So that's not a good sign. It also shows year over year, we have lost 2% of accounts. It's just not a good thing to see money leaving, both in deposits and also in trading. So I know they do own TD Ameritrade too. They have that trading platform, which also has had issues we've seen with how much they've borrowed. Doesn't look like a good sign for Schwab, especially with with all these other banks that are reporting earnings that are like expected, their expectations meet, but the numbers below them show that there is a huge problem where they're just bleeding out in several areas. And that's kind of a scary sign. I've been short Schwab for a period of time, but I think there's a good reason why we're seeing that pop up on the list. Again, let me pull up that list one last time. This is the list that we've been looking for, which banks we should be keeping an eye on, because of a lot of their liquidity and equity coming from some loans that are not necessarily people you want to be borrowing from. But they're number 2 on this list, right? They're right behind Charles from Signature Bank, and then not too far behind them was Silicon Valley, and right behind them was First Republic. Schwab is number 2 on that list. The thing that kind of saves them is the fact that they have a lower percentage of deposits over 250K, which is right here. But the issue I'm seeing is obviously how much they've borrowed in equity in short term, right? Total short term, I think this is in millions. That's probably like $10 billion they probably borrowed in that aspect. So they have a money issue. I think that there's a good chance that we could see further bleeding coming from them. I don't believe the headlines one bit. It just does not seem like anything is adding up when I'm looking at Charles Schwab. And $53 or so, I think the share is currently trading at. It's 53, 55. I don't buy that one bit. I think that today is a bit of a fake out, with people buying what is a good headline, but not necessarily looking deeper into the numbers.
All right. That's what you brought to the table today, Kev. So appreciate you breaking those numbers down for us. Yeah, the money flowing out of the system should not be a surprise as people are having to, whether it's liquidate investments to pay just, day-to-day bills. I keep seeing more and more people like complaining about, rightfully so, grocery store bills, things like that. So it is a tough time. Chris saying Truist reporting earnings as well this week. That is
they're
one
bad.
definitely keep an eye on. We had that news. I don't know if we want to talk about the ETF fake out at all, but we did have that report that it got approved. Then someone came back 20 minutes later and said, actually, that didn't happen. That was wrong. And we heard from Mr. Gensler that market manipulation is the reason why they are not going to approve these things, and their point was like proven right there.
Yeah, and yeah, let's just get into it. I'm going to pull Bitcoin's chart because this is something it's massive, but they pretty much proved Gary Gensler right. And I don't know if that was something that maybe the SEC was waiting for to happen, but there's a lot of things that could be that are really questionable. I think about what we saw this morning, right? So this is Bitcoin on the 5-minute chart, and we can see how much it shot up and within that 5 minutes of the tweet coming out. But I think the bigger question is back here.
It's amazing, by the way, that it went exactly to $30,000 on the fucking nose and then came right back down.
Yeah, you know who does that quite often?
Who's that?
Binance. Binance always has it go exactly to the penny. We can go back through history where went from, it's gone from 31,000 right to the dot. I mean, we did that a few months ago, right? It went straight to 31,000 and then it got rejected right from there. I mean, pushed up after it, but this is where we are in the market right now, and a lot of people are worried about what's going on over here. I think what happened over here on the 5-minute chart's way more interesting, right? So, a little bit after the weekly close last night, we saw this pull up at, what is that, 5 hours? So that's like midnight, 12:15 or so. It shot up all the way to, let's see where it closed. It's 27.7. It's up 1.59% on the 5-minute chart there. Shot up $434 in the 5-minute chart. That's a pretty good move, right? Kind of consolidated sideways, right? And then we shot up this morning when the tweet came out, and it was insane. I mean, how much money did it shoot up at that point? A couple $1,000s. I think it was roughly, I think it was almost like $3,000, I think, from where we were last night to where we ended up here. It was an insane amount. And then it just quickly got rejected in the next candle right back down, right? We saw that a lot of people started selling off as soon as it got to 30,000. The question is, why did it pump up here beforehand? And does this not look like a market maker pattern to anyone else? I see it once again. We see a fast shoot up, then we get consolidation, and this is on the shorter time frames. And then we get a massive shoot up here. And it's like, okay, we find out that this 100% was a lie. This was a tweet that was sent out that probably shouldn't have been sent out. I don't know what type of like inclination they had to even send out that they approved the ETF approval. BlackRock was like, no, this is bullshit. Instantly, Larry Fink was like, nah, we didn't. It's still pending on our side. But this is really questionable here. I think that a lot of exchanges and people, in the market knew something. Or people were saying, oh, somebody knows something, that's going to get approved. I think that's just the perfect scenario for what happened here. I don't know if the exchanges told Cointelegraph, yo, say this, but I think there's definitely some rumors around here where they were getting in, waiting to liquidate a lot of short positions that were just sitting all the way up to 30,000. And they did a great job of getting everyone out up to 30,000. I think we were at $104 million within that 1 hour of liquidations that we saw in crypto. So that's absolutely, shorts got destroyed, right? And now on the way down, a lot of people who longed close to that 30K are probably getting wrecked too.
Yeah, it's I mean, no one really had enough time to buy at that level because it came just right back down. But whales had an opportunity to sell at that level, and Binance did too. So they got exactly what they wanted.
And this is the worst part about it too. Obviously, Bitcoin dominance, right? We saw it shoot up to 52%, which we're almost back at 52% once again.
Yeah, we're getting a little pump as we speak right now. ETH just went back over 1,600 by a few quarters, and Bitcoin is approaching 29 again. We will see how long that lasts.
we talked about this week being a stupid week, right? We said that options are expiring this week, and people don't sometimes forget that Bitcoin does have options. There's futures trading for Bitcoin on the CME, but not just with that is the reason why it's pumping. I think a lot of people are seeing the markets pump today, and it doesn't make really a lot of sense for what's driving this market to do this. I think a lot of people are just trying to get out of the markets and exit pump. If you ask me, I think it's a lot of a fake out. Probably a fake out, especially when you see the VIX down 10% too. I'm sorry, I'm just looking at all these numbers just changing real quick. But the fact that we're almost at 52% once again, and we saw that we were at 52% back in June, right? I think that we're going to go above 52%. I think once we hit 52%, our next target's probably 57, which is all the way up here. But what would that mean for Bitcoin? Well, let's look at Bitcoin's chart real quick. The biggest thing that I'm seeing that I was expecting a 5-way move down here. Well, I don't see that anymore. And what I see is arguably a lot of market manipulation, right? We've seen a lot of these market maker patterns where it just shoots up and then it kind of bleeds out, get a drop down, shoots up once again. This is the most likely thing I'm seeing right now. The left shoulder, there's your head, there's your right shoulder, and then it's got to come down. And where does this come down to? I think it comes down to 20K, 19,000 in that range. And this is a massive pattern, right? This is one that's spanning from all the way from, Silicon Valley all the way to, I don't know what the next thing that drops. Maybe it's an exchange, maybe it's a bank, maybe it's just fear in the markets. But this is a massive head and shoulders pattern I'm seeing. We have to wait to see how that right shoulder plays out. But we're finding a lot of resistance on this blue line that we're seeing right there. Where am I? There I am. This blue line right here, let's pull this up, make that a bigger. You can see that our head wicked off of it, and then our right shoulder wicked off of it. That's 30K right there. Obviously, if this starts to come down here, we're all the way down here once again. But if we start shooting up again, and then we start getting a few days that are closing in this range, I wouldn't be surprised if we have a few days that close, somewhere in the 28.5 to 29.5 range, just because this is actually a great level for a lot of whales to be getting out of their positions. It wouldn't surprise me one bit, but I think that this is eventually going to break. And when it does break, we're probably going to be seeing Bitcoin back. It's, maybe right around here. 20,000 would probably be my bet. So I'll say 19 to 21K, just so we have a bit of a range. But I think it's going to break from this level of support, might get a retest, and then we might continue down from there. But this is not necessarily a bullish thing. I think people are excited. It shows you that the only thing in this market that was driving the price up 100% was the hope that we would get an ETF approval. Well, now Gary Gensler has the gunpowder not to approve it, and we're in an even worse structure than we were for a 5-way move down. This is worse than what I originally anticipated, and that's something you need to keep in mind if Bitcoin starts to act irrational like it was this morning.
Yeah. Patience. I firmly believe, and I'm with Kevin on this one, that if you can be patient over the next 9 to 12 months, you are going to have amazing. And if you can remain patient, but also have your shit in order to take advantage of some of these big moves down when we get them, you will have opportunities to make a good amount of money. I don't know how much, right? Like the term generational wealth gets thrown around a lot in crypto. All depends on how much you have to put into it, right? But the returns are going to be very, very much in your favor if you can just be patient over the next 9 to 12 months. And guess what? We're not going anywhere over the next 9 to 12 months. We're still going to be here doing this shit. I got nothing but time, guys. I got football to tide me over right now. I got basketball on the way to tide me over. I'm great. So, just have your house in order and be ready for the opportunities to buy when we do get the legitimate downside moves, because, don't try to time the bottom perfectly. Just try to accumulate when there is blood in the streets, and that blood is coming, unfortunately, because there is just too much potential volatility out there, too much downside risk, and not enough upside potential.
Definitely, dude. It's have your shit in order is probably the best thing, and I don't think a lot of people do have their shit in order right now. And we could take a look at that if you want to when it comes to credit card delinquencies.
Let's do that.
Because there is something that's quite alarming. Again, there's a lot of stuff that happened that isn't making the news today because we're talking about this Bitcoin ETF. One of them, don't forget, Rite Aid also filed for bankruptcy last night. That's just another business that's been around for a long time that's, filing for bankruptcy again. We're also seeing Walgreens probably going to go on strike too. We're seeing a lot of these strikes continuing to go out. We saw Citigroup also announce that they're, got probably $2,000 worth of $2,000 employees worth of severance that they're willing to hand out as they lay off 7,000 people. LinkedIn's laying people off like crazy. So with this chart right here, I just want to get into it, is the unemployment rate, it's the federal funds rate, and it's also the delinquency rate on credit card loans, right? So this is kind of like once all three were starting to be charted and all the data is available. So this goes all the way back to, I think, 1991, Q2 of 1991. And we get one really good recession in here that kind of shows us what's likely to happen in this given case. And then we get, obviously a small little recession that we got here from the dot-com bubble. But I want to focus on 2008 and where we are currently. So with 2008, we can see that the federal funds rate from 2004, which was effectively at 2.9%. Ooh, my voice cracked. 2.9%, and it went all the way up to 4.12% before obviously curtailing in Q4 of 2007 when they started cutting rates, and it dropped all the way down to effectively zero, right? But we can see that unemployment started to rise going into the end of federal funds rates being raised, right? So at that point, we can also see that there's a lot of delinquency rates on credit cards going up here. And that was something that we saw both in Wells Fargo and Charles Schwab, that, credit card delinquencies are going up, and we're also seeing people not using their credit cards as much. Not good for the credit card companies. But as we get up here, we can see that unemployment starts to rise up with credit card delinquencies, and we can see that the federal funds rate tends to go down at that same point, right? Where we are right now is we have a federal funds rate that's extremely high, not seen since we're at 5.26%. We got that back in Q2 of 2007, 5.25%. And we can see that unemployment is relatively low. However, we're seeing credit card delinquencies increase. So what does that tell me? That tells me that unemployment, which is a lagging indicator, obviously you see unemployment rise from 2008 to 2009, 2010. That's probably going to show you that people are going to be losing a lot of money in the coming, I wouldn't say months, but in the coming years, I'll say, to the point where unemployment is going to rise, and that's going to allow credit card delinquencies to rise. So I think credit card companies in the long haul are in pretty bad shape, especially now that we're seeing it start to rise, and eventually unemployment will start to rise too as people leverage credit card debt, even though it's not the best type of debt to leverage, but you need to survive. And I think that we're probably going to see the federal funds rate drop. But the question is, does this federal funds rate drop to zero? Very similar to how it did back in 2007 into 2008, because the Fed starts cutting rates, in a way that it feels that it's fight against inflation, or does that mean that they're going to have to start cutting it because something's broken? And if that's the case, then there could be a lot of money that we're worried about, in the system that is fleeing. Bank deposits, we're seeing a lot of bank money fleeing out of Chinese banks. We saw a bank run over there. We're seeing bank runs quietly over here in the United States, but no one's talking about it. We're seeing exchanges see the same thing. A lot of money is leaving the system. Question is whether or not this is going to be sustainable for the economy, where people start losing their jobs, have to leverage debt, and then eventually credit card delinquencies continue to rise. So with Visa, was it American Express has earnings this week? That's going to be a really interesting one to watch. On Friday. And then obviously other credit cards like Discover and what's the other one? Visa, MasterCard. Those are going to be really interesting ones too, because we'll take a look at it come Friday at those charts, but there's a good chance that we could see some very similar scenarios play out to those price action that we saw back in 2008 play out here again, because these charts are lining up that, hey man, if federal funds rates stay this way, or if they start to cut, those other two indicators are probably going to start increasing significantly.
Okay. Anything else on the chart side you think is worth touching on? I know that maybe something in the total 3 market cap had caught your eye. We get a hit on that as we begin to wrap up today's show.
Yeah, it's been an interesting few weeks. Total 3, something did happen over the weekend. I think you guys all know what happens. Let me just pull it up real quick. Where am I? Here we are. Yeah, in total 3, we saw something happen with the 50 to 200 EMA. You all know what that is right there. Look at it. 50 has gone underneath the 200 EMA, and I think this is in order for us. Oh, you're squinting. You don't need to. I'll show you what it is.
Okay.
We got a death cross.
'Tis the season for the death cross, Rob, both in just this stupid market and Halloween.
Yeah, once again, everyone telling you that alt season was in full effect clearly doesn't know what the fuck they're talking about. And the only thing that we're seeing really rise to any significant extent right now is Bitcoin. But you can see that alts, even despite the pump that we got this morning with everything shooting up because people thought the spot ETF got approved. There's no way it's going to stop this death cross. We're too far below the 200 and the 50 moving averages. And it just tells you we're probably going to continue bleeding out. Now, it's very possible that we could get a little bit of a pump before then. I don't necessarily see it because I think Bitcoin's going to remain extremely strong against other assets, especially as we see, we're in this pattern here. We're waiting to get direction, whether we're going to push up here or push down. I think it's more likely that we're going to push down from here. We're going to test maybe this midline of this parallel channel. But, this is going to be a slow bleed out, it seems. And I think this whole pattern is going to play out. I think we're going to form this bull flag, this massive bull flag that spans from, May, June of 2022 to maybe April of next year. Hopefully, I mean, if it could go all the way to October if we really want to get stats that bearish. But I'll say, April of next year, we'll keep an eye on how that plays out. But eventually, this is going to break out, and we're going to see alts pump to the upside. However, we're not in that case by any means right now, and we still have a lot to go. I still believe we have to close some of this gap down here, right? I think we have to go to at least 182 bill. I think that's where we're going to see a lot of alts start to bounce. Doesn't mean that it has to hold, right? If we don't hold that, then obviously our next level of support is going to be somewhere closer to a $112 billion market cap for all alts, excluding Bitcoin and Ethereum. So that's not a bullish thing at all by any means. It shows that we're probably going to continue to see a lot of bleeding. And if alts are bleeding, then it's probably because Bitcoin's either going down in price or Bitcoin's going up in price, and the trading pairs are going to kill them continuously. But for what it's worth, that's not a good sign. Also, what's not a really good sign too is that the UK is not allowing any new customers for Binance. They said that no more new customers in the UK for Binance International for them to be using. In other words, that means that the UK is probably going to ban Binance fairly soon. That's what I take it as. I have no proof that that's going to happen, but just another market where they're losing market share over, and it seems like the walls are tumbling in. However, if we look at the price for BNB, we're at 214.7, which is a pretty good move from where we were, last week. We went all the way down to 202, 203, I believe. And we could see that even today we shot all the way up to 218 before they made that news in the UK. We're finding resistance right now in the daily at the 50 moving average. You can see that we're getting pretty overbought. We'll probably be overbought by the end of today or tomorrow. But, I always worry about these patterns because obviously if this hits up here, it could break to the upside. But it seems like there's a lot of, I think the liquidity is the main issue because even today with everything that's happened, there wasn't enough money to push this market into a real bull market, right? Sure, we're up, roughly $1,400 on the day, sure. But how long is that going to be? How long is that sustainable for? We're going to keep an eye on how that plays out. I think that we're still going to see maybe a little bit more liquidations up to 220, if that's possible. Maybe we liquidate everyone's 218. And then next thing you know, we're probably going to start liquidating people down here. Whether that holds or not, that remains to be seen. Again, as you cut Binance off of market share from where they can make money from trading fees, then they're going to have to dip into somewhere. And we know that they own 76% of all their tokens, very similar to how FTX own most FTT tokens. So I think that there's a very possible situation where they have to dip into that fund. And if that's the case, then we could start to see the price go down. But again, this guy he's like Tony Montana at the end of Scarface. I don't know. He's just not going to go out without a fight. And Gary Gensler is, doing everything he can to hurt him. But I think there's a lot of people that are starting to cut ties with Binance. And I think that's going to definitely impact the price going forward. So maybe there's less manipulation in that case. But today was a very manipulated day. I think that shows Gary Gensler, hey, we don't need the spot ETF right now. We could wait on this until we start regulating the space. And maybe the space does need to be regulated to some extent, right? Because this is ridiculous that fake news could definitely impact the market that much. It's absolutely a joke. And I'm sure these exchanges won't refund anyone who got, liquidated on the short side, right? Then when the price pushed up. Shouldn't have, but it is what it is. There's nothing you can really do.
It's just kind of the nature of the beast. Every market gets
Exactly.
manipulated. We're seeing all of these, senators and congressmen and women who bought military stocks right before the conflict over in Israel. It's just constant market manipulation from these people. And I mean, Nancy Pelosi doing her thing, like on both sides of the aisle. It's fucking disgusting. So, in an ideal world, we wouldn't have market manipulation, but we're never going to live in that ideal world. So now it's a matter of just trying to not be impacted by it as much as possible, right? Like trying to be as level-headed with these things and not get caught in the crossfire.
Definitely. After everything that's happened today, what do you think is the outlook for the next week? And do you have any game plans for what you're going to do? Because I definitely have some game plans for what I'm going to do because this market seems highly irrational, but I think that there's a good chance that it's irrational for a reason that they're afraid.
Yeah, I acquired some more ETH via selling some other assets, and I am looking for a position or for an opportunity to move some of that more into stables. I have my current stable holdings. I have my long-term holdings I'm not touching, but I do have a little bit more liquidity to kind of play some of these swings. So I do think, if we look at the daily for ETH, I don't really trade Bitcoin. I just slowly accumulate Bitcoin. But if you look at the daily for ETH, I still think there's more room to the upside. And so I would love to get an opportunity to sell what I acquired. Because the ETH that I got was around 1550. Be happy to sell that at like 1650 or even 1700. So that's kind of what I'm looking at there. I've toyed around with my idea of exiting this natural gas position and moving some into the UVIX now that it's had such a big pullback. Like I've been of the belief for a long time that the VIX is going to see its day, and this move back down to the 17s I think is a really good buying opportunity to buy some potential volatility, because I still do believe it's coming, whether that's later this year or early next year. So that is what is on my mind currently. I'm not really too interested in buying any more tech stocks right now. I'm not willing to bet on a bull market in the coming 3 to 6 months. I'm happier to take a position that we are going to see down before we really truly see a good run of going up again.
Definitely. I think OPEX is a stupid week to be trading the markets, kind of. I think it's a good week for building positions for if you have a thesis. Again, that's just my belief. I can't tell you exactly what to do, but for me, what I'm doing is I'm taking advantage of this market, thinking that nothing bad's can ever happen, and just keep shopping for contracts. I think that's the smartest play that I can do right now because I'm not expending a ton of capital, but I'm pretty much increasing my my exposure to risk assets if something were to happen. And they're not necessarily bets that I'm just saying, fuck it, let's see what happens. They're kind of, I'll say well researched, decisions that I'm making, seeing how price actions played out in the past and what's going to come next. I did want to pull up the VIX real quick before we head out because we do have a potential golden cross coming for the VIX. We've seen that there's been a lot of pressure pushing this to the upside. Seen a lot of people say, well, it can't crack above 20. Well, it's like, yeah, that's literally the same exact thing that happened in February of 2020, right? And then next thing you know, it's at 85 or something like that when the pandemic hit. And every time we get a golden cross, we tend to see the VIX pump pretty significantly. And that's obviously because there's a lot of pressure to the upside pushing it up. But I do think that with OPEX, the VIX options are going to expire on Wednesday, I believe. I think then we'll start to get some clarity on what's going to happen with the VIX. We might get that golden cross. We might break out of this level of resistance we can see on the blue lines. So I think that for me, maybe adding to that UVIX position is probably going to be something I'm looking for if it does pull back a little bit more before the options expire. And then just banking and credit card companies, I think, are going to remain my probably my I don't know what the word is. What do you call it? Conviction bet. My conviction bets that we're going to start seeing really negative price action because I am not betting against the consumer, but I just know the consumer's in a really bad state, and it's definitely going to impact a lot of these companies going forward. Schwab was a perfect example of it. Wells Fargo is also expecting to lay more people off too because they're just not efficient right now. That's what their CEO had just said this morning. It's a lot of bad things on the horizon, but the headlines are just not telling you. You have to dig into the numbers, and then you just have to realize that hey, this is not adding up to a pretty picture. There's too much shit going on in the world. I'd rather I'm risk off for crypto. I'm not playing with that anymore, but I'm definitely looking for opportunities for things that people just are not anticipating happening that seem probable given what we've seen things in the past.
All right. I think that is a good place to leave it. We'll be back tomorrow discussing the latest in the markets, any other fake news and misinformation that is being spread. Don't you worry. We'll be covering that. Before we go, if you have not hit it yet, the like button down below, subscribe to the channel, drop some comments, tell us what you're liking so far, anything else you want to hear us discuss. Share us out on social media if you found our show enjoyable and if you think other people should watch it too, because the more people we can help, the better. Have an awesome day, everybody. Stay safe in the markets, and we'll see you tomorrow.
Take care, everyone.